Hello folks, welcome to Pro Trader Strategies Market Commentary for Monday, May the 17th. Yes, I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those impact the markets with some of my market analysis. I'm going to do the same thing in these daily market commentaries, but I'm also going to talk about option strategies I implement into my portfolio based on those given assumptions that I come up with in my market analysis. For you folks, I've streamlined that process for you to find the optimal option strategy for any given assumptions. So if you have a bullish assumption, most people would say go out and buy a long call. Well, that's not always the best strategy. What we do is we look at the pricing. That will tell us what the best strategy is. Finally, if you take anything away from this, please smash that like button for me down there. It really does help us out. And without further ado, let's get on with the economic data and see what's going on with the overall markets. Across the pond, not a whole lot. As it being a Monday, there's not really a whole lot going on. Something to note with Canada, housing starts did temper a little bit, coming in a little bit lower than expected, but most of the economic data here in the United States for a Monday, it is quite a bit actually. We got Empire State Manufacturing coming in higher than expected at 24.3, expected to be 23.9. Now these are manufacturing gauges, obviously, and we get these out of the different areas. We'll get it out of the different, we'll get the Philly Fed, we'll get the Chicago. All of those are from those different sectors. Now last time around, we saw a bit of a mixed bag, mostly to the upside, but it was a bit of a mixed bag. So we're going to get another round of these. So we'll keep an eye on that to see how the manufacturing sector is doing. I would not necessarily be super surprised to see this pull back, folks. Why? Because of all of the supply chain issues. All right. So don't be too surprised if it looks like it comes off a little bit. Good to see, though, that we got the Empire Manufacturing higher than expected there. And the NAHB, which is the National Association of Home Builders Index. It's for obviously the housing market, coming in right in line with expectations and in line with last month's number at 83. Then throughout the day, we have just about every FOMC member speaking, so I'm not going to go through all of them and butcher half of their names. Just know that there's going to be all kinds of those ladies and gentlemen speaking today. All right, so let's get on to the markets. We've got crude oil moving a little bit higher today. We're right there. We're creating a value area, and it seems to be pretty happy in and around that location. Pipeline is no longer an issue, folks. They paid the ransom. It's back online. So that's not to be worried about anyway at this point in time, and probably a good thing because everybody else probably went on panic mode on their cybersecurity. So that is good for the infrastructure anyway. Bitcoin really taking some heat again today, down $6,700. Everybody's talking about how Elon Musk was talking to Tesla to try and get out of their Bitcoin. They didn't get out of their Bitcoin. Elon got out all of his. The market's starting to roll over here. Is it a point where the weaker hands are going to be rushing to the doors and that causes some panic selling? Well, it seems a little bit weak today. I would be more concerned about something like Doge than Bitcoin, but at the end of the day, I'm not in any of those because I just haven't been a huge believer. I mean, I could have gotten in when this thing was fractions of a penny and thought about it, but did not ever get involved in any of the crypto space at this point in time. I followed it. I know all about blockchain, probably as well as anybody that's trading it, but I just haven't ever really jumped on board. Anyway, gold moving higher today and getting above our support resistance line here, right at around, we'll call it 1850, 1860 area. That we blasted above. So that is an interim support resistance that we've seen over the last 3 to 4 months here. So I've had that line in there. We've ripped right through that today, and it looks like we are going to test 1900. The settlement above there is very strong with this 50-day simple moving average rolling over. We've got inflation worries. The gold bugs are coming out in force, it looks like. So a settlement above this 1850 area, I'm thinking 1900 is going to be the next handle that we're going to see before we'll see 1700, let's say. All right, bonds right now topping out a little bit. It's unchanged for the most part, but it just does not seem like they can get these bonds moving higher and causing interest rates to go lower. That's all around this inflation worry, right? If inflation starts to rise, you're going to want to see, or you're going to feel interest rates wanting to tick higher as well. If interest rates are ticking higher, that means bonds are going down. All right, VIX moving higher today, back into the 20s, out of the teens, as we're seeing weakness across the board pretty much in the markets. We've got the tech sectors showing weakness back down into that trend area where it lines up with our trend lines from 2017 on the upper band and 2018 on this lower band. We've talked about this. That has acted as support and resistance. Yes, you could say that the 50-day simple moving average is what's doing it. Well, I would say, folks, I've had this line in there for about 4 years now, and it's been following it pretty good. So we are following that trend line there. As far as I'm concerned, I'm following that. Maybe not you guys. Yeah, well, we have the Dow Jones Industrial Average off by about 180. It was looking really strong heading into the weekend there. And I was thinking we were going to see some strength today coming in to today. But we're seeing weakness right off the bat. Will that turn around? Maybe on turnaround Tuesday, turn those hands around. That's, for sells, you put your hands out. For buys, you put your hands in. That's turn your hands around. Turn around Tuesday. So hopefully we'll get that, as long as we don't get major selling throughout the day and kind of pitter patter around where we are. I think that the chart will look relatively strong still, as it would look as just more of a pause than anything else. As you can see here with the E-mini S&Ps, overnight inventory was relatively short, but it just wasn't very aggressive whatsoever in either direction. And throughout the day, every candle, so far, well, we had a green one in there. It seems like they could be a green candle at any given time. We're opening up, rallying, and then finishing near the low of those candles, but it just doesn't seem like it is really aggressive selling. Now, if you have been under a rock, then you may have not heard about AT&T today. Basically ditching Time Warner because they want to be, a media company, and going after Discovery, which is the ticker symbol DISCA, or there's a K on one of them. Basically, they're going to end up probably very close to around $33, $34. One's starting to rally. They're migrating towards each other. I don't think it's a very good deal for AT&T. If you wanted AT&T for that nice dividend that they used to give, they will no longer be giving out probably any dividend with this acquisition. It didn't work the first time. They're, rather than spending this money to make good content like everybody else, they're spending the money to try and find good content and good content creators. So I don't think it's a great deal for AT&T. I think they're, trying to do the same thing over again. They probably should concentrate on something like 5G and stay in their lane. But it is what it is. Everybody thinks that or some people think, like AT&T, that you need to have a media company in your arsenal because you are a phone company and delivering the service to people. So anyway, it is what it is. We'll see how it works out. I don't think it's a great deal. It seems like they're just trying to do the same thing over again with a new company. All right, that's it. That's all I got for you guys. Take a moment to go over the disclaimer. Finally, if you can't smash that, take that. All right, take care, y'all.